My name's Ann Heffron, and I'm the project administrator for the Center for AIDS Research. And we've had a lot of demand from junior investigators who had a lot of budget questions. And so we've gathered a nice group of people today to talk to you about how to prepare your budgets, what's allowable, what isn't allowable, especially from the NIH standpoint. So I hope you'll get some good information today. We're going to start with Rick Inglis, and he's the Assistant Director of Sponsored Projects and Financial Research and Compliance at the School of Medicine. So, welcome. Thank you.
One correction now, it's from the Controller's Office.
Sorry.
So we are central administration. But thank you for having me here. It's always a great opportunity to get out and see new faces and spread the joy about direct costs. But I'll leave that up to you after we're done. What I want to touch on first with direct costs and indirect costs would be the federal regulations surrounding these types of costs. And right now we're in a very, I guess, different situation where we have two federal guidance governing cost principles at this time. We have the OMB Circular 821 cost principles, and this is still in effect for awards and appropriations that were issued prior to 12/26/14. Okay. Now, if we have any new awards, new appropriations after 12/26, they will fall under the Uniform Guidance, which is the 2 CFAR. It's a Part E cost principle. It's in the section of 200.400. Okay. At some point in time, though, once we all get new awards and we have new continuations and new appropriations, everything is going to be under the Uniform Guidance. Now, probably like a year from now, we will probably see that. Okay. So I'm going to concentrate on, I guess, the new world, and that is the OMB Circular 2 CFR 200 Uniform Guidance. Okay, and cost principles under that are located at Subpart E, begins at 200.400. And it does indicate that a non-federal entity must follow these accounting practices, okay, to adequately document support for costs charged to federal awards. Okay, so this is it right here. If there's one thing you leave here with, is this a section that you want to go back and take a look at. Okay? And here's a little more detail with that and what it describes and what we look at when we read this section. And there's also some appendices that are used here, and they're 3 and 4, and they are more associated with the indirect cost as opposed to the direct cost. Okay. So you have general guidance under the Subpart E, but then you have the appendices that go into some more detail. And in here, just as a summary, what this section does is defines your direct versus your indirect, or facilities and administration, or you might hear F&A. Okay. If you hear that term, they're referring to the indirect cost. And so it will define what is a direct cost, and also define what is an indirect cost and what is included in the F&A rate. Right? And it prescribes methods of how we distribute the F&A cost to the various functions throughout the university. We have cost analysis in the Controller's Office that does that particular function and negotiates our F&A rate. Okay. Just for information, you probably wouldn't be involved in that when you're writing your budget. You're just worried about what can I charge directly and what's considered indirect. All that behind the scenes stuff is handled by that particular office. And it also sets the standards for allowability of cost, allowability of direct cost and indirect cost. So we're going to look at a direct cost. Okay, and a direct cost are these costs that you can charge directly to a federal award, okay, or it could be a non-federal award. These principles we apply to our federal and non-federal. We don't distinguish between the two because we have to be consistent how we charge costs, okay. And to be a direct cost, it has to be, the award has to, you have to be able to identify this with a high degree of accuracy and ease to a particular cost object or a particular program. Okay? If you can do that, that would be considered a direct cost. And we'll get into some examples later on. And to be a direct cost, it has to prescribe to these 4 criteria. We'll go through each one, but it has to be allowable, it has to be allocable, has to be reasonable, and we have to treat it consistently. Okay. What do we talk about when we say if a cost is allowable? Well, a cost to be deemed allowable, it has to adhere to the federal guidance, right? And it also has to adhere to the agency, specific agency guidance. And it also has to adhere to the actual notice agreement, because we get the NOA, the NGA, many different terms that we use for that. Okay, so once we get by that, we want to look at allocability. It has to be allocable. What do I mean by allocable? That means that the award had to receive the direct benefit of that cost, of that service. Okay. You can assign it to that particular award. Now, stuff that is indirect, and we'll get into that, is hard to prove that it's allocable because you don't have you can't easily identify it of that particular award receiving the direct benefit of that. And if you do, what percentage or what portion of that? So it has to be allocable. It has to be directly related to your program, to your project. Okay, so allowable, allocable, and reasonable. Now, reasonable is kind of subjective, and it's I don't know, I kind of find the definition a little, what a prudent person under the circumstances prevailing at the time the decision was made to incur the cost. Okay, so that's what might be reasonable to one, might not be reasonable to another. Okay, but we have to use, this is the definition that the federal government gives. And I always like that, you hold the old rumor that, the federal government was charging, $200 for a hammer. Okay. Now, would you consider that reasonable? I don't know, if I went to my local Home Depot or my Lowe's store and I went and I saw a hammer for $200, me spending my personal money, no, I would not think that was reasonable. Unless, of course, it was a left-handed hammer. Since I'm left-handed, I'd pay the extra $200. But that's not the case. Either way, it's not reasonable. So you have to use your own subjectivity with that. And you might look at what are things that cost on an average around, what's the market value. So keep that in mind. So it has to be reasonable. And then it has to have consistent treatment. And what do they mean by that? Well, what we're trying to get at is, just because I have a federal award, I'm just going to charge this cost here because it's federal. Oh, you know what? Because I have federal funds, so I don't have general funds. Well, I'm not going to charge that directly to this, to my general fund account or discretionary fund account or something like that. It has to be consistent. So it's usually considered something that's not assignable to a grant, then we have to be consistent with that and not charge it just because we have federal funding. Okay, so we have to look at the consistency. If it's treated at F&A, an indirect cost in most circumstances, then it should be considered an indirect cost regardless of the funding source. Okay, we understand that, regardless of the funding source. Now, we do have exceptions where we might have something that's usually treated as an indirect cost, but in different circumstances that we can prove that it's allocable. Oh, you received a direct benefit. It's allowable. Hey, I can assign this easily. It's within the guidelines of my grant information. It's the guidelines with the agency guidelines or uniform guidance. Okay, and it's reasonable. Well, you can go ahead and charge that directly. And we'll get into some of those cases when we talk about administrative costs. And there's a very fine line with that. It's to determine whether it's direct or indirect. Okay, so we must have a consistent treatment. So you have to kind of take all 4 of those criteria that we talked about before. Allowable, allocable, reasonable, consistent. You pass that test, you ask yourself that, go ahead, charge that to the grant. Okay? But have the documentation too to support that if it ever does get pulled in a audit. Okay, here's just something I threw out there. to kind of look at things that I know the auditors look at, what they consider high risk, and that's inappropriately charging awards, travel equipment, things like that. Late cost transfers always, raise a bell, a flag. As I spoke many times about charging an award based on the availability of funds, that's a no-no. Okay, just because you have funds available, you just can't charge some type of cost there. It has to meet that four criteria. But we're going to talk about direct versus indirect charging. This is another one of the areas that the auditors love to look at. So we're going to get into what is an indirect charge, F&A cost, facilities and administration, okay? And it's divided into two categories, okay? Facilities and administration, okay? So that's pretty clear cut right there. And how do we describe facilities? And then we can read that. It's our buildings, it's our equipment, it's the grounds, it's maintenance, okay? Things like that make up our facilities. It's this room right here, okay? It's the utilities and all that, okay? And why don't we charge that directly? Because it's very difficult to be able to easily assign how much each award receives when you might have a lab or you might have this room that you use for research or not. Okay, how much? Oh, 10% of the electric bill? How can I do that? You can't do it easily. You can't do it accurately. So those type of costs, they're in that indirect pool. Okay, so we have facilities. And then we have the other side of it, administration. Okay, so here we're talking about general administration. We're talking about myself. Okay, I touch on sponsored awards all day long. That's what I do. But I can't sit there with a pen and a paper every time someone calls me on the phone and says, oh, this grant, that grant, I'm keeping tally. I can't do that. It's impractical. Okay, so that type of stuff, my time, my pens, my papers, the space that I need, all that type of supplies is considered administration. And it's not charged directly, it's not indirect. So here's some examples of what we have with administrative costs. You're in a department, you have a financial analyst, right? Your administrative manager, they're servicing all your sponsored awards, whether you break that up by PI, whether however you might do that, they're working on multiple sponsored awards, okay? Your toner, your photocopy. It's very hard to get a price on that toner when you buy one toner cartridge and you put it in there to be able to figure out the cost of that. Pens, paper, postage, local telephone calls. Okay. And you notice they don't have long distance on here. Long distance can be a direct charge, because usually when you're making a long distance call related to an award, it's what? It's directly applicable to that award. And you can prove that. Okay, is it reasonable? More than likely, depending on what service you're using. These are all pretty reasonable. Memberships, okay, and other type of costs that support the basic mission of the university. Okay, so these type of costs, you're not charging directly. Okay, they go into our F&A. And here, this is a very important part. If we're going to take one thing away from today, we're going to talk about administrative salaries, clerical staff, and costs that are related to that. Okay, and this is what the Uniform Guidance said, and it's no different, really, except for one caveat when we did that, to what the OMB Circular 821 described in this meeting. So salaries of administrative and clerical staff and other administrative costs should normally be treated as indirect F&A costs. Direct charging of these costs may be appropriate if all of the following conditions are met. So here we have something, as I spoke about earlier, something that's usually treated as an indirect cost that we can charge directly, okay? Because we have an exception to the rule. And that exception is that administrative person has to be a big part of the project, right? They're taking up more than my normal time as administrative personnel that I would give to all my other awards, okay? They have to be specifically identified in the project or activity, and when you do your proposal and you put your budget together, you're going to put that individual or these costs into your budget justifications, okay? And these costs are not also being recovered as indirect costs. Okay, so you know what they call that in the federal government? They call that double dipping. Okay, here you're taking from one pot, and here we're behind the scenes taking from another pot. We don't want to do that, okay? We only want to charge a cost once, either directly or indirectly. Okay? And once we charge something directly that's usually an indirect cost, we have a way you know, we identified that and we removed that from the base. So it's removed from our indirect cost rate. Okay, when next time we go to negotiate, because it's not in the base. Okay? Now, in the past, it used to be, OMB Circular 821 said it had to be a major project, only major project. They took that definition away. So they're saying, they're giving us more of a leeway to charge these costs, not on major programs like a P50 or something that these large programs. They're saying, hey, if it meets the criteria of a direct cost, go ahead and charge it. Okay? But also make sure that you have it in the budget. Okay? And look at the third bullet, which I kind of skipped over. Okay, I talked about the budget, or have prior written approval of a federal agency. So say that what they're saying here is, you know what, I forgot to put this in the budget. Something came up during my program that I need an administrative staff to do something that's over and beyond their normal responsibility. You can do that, but you need to go ahead and go to your grants manager officer and ask for prior approval. Now, this is what uniform guidance indicates, but you have to look at your agency guidance. NIH has put out some interim guidance to the uniform guidance, and they're saying for your administrative costs that you don't have to have that prior approval, but you have to meet all the other criteria. So it still has to be a direct cost, you know. And it has to be integral to the project, you have to have it documented, okay? But they're saying, hey, if you don't have it in there, you don't have to pick up the phone and call me. Have it there, but make sure you did A, B, C, D, okay? But each agency is going to be different. We don't know how NSF is going to respond to that. We don't know how DHHS, you know, we have AHRQ, you know, you have many other agencies besides NIH. The majority of our agencies fall under NIH. So I would make it a good practice to go back and look at that guidance that was put out by NIH. In fact, they kind of waived a lot of the prior approvals that we used to have in the expanded authorities, which I found very shocking when uniform guidance took those away. NIH came back and said, you know what, we're still staying the same way, basically, which is good. It's good news for us from a management standpoint trying to manage our org. Okay. So, with that being said, I think we're going to wait later, you know, for that. But before I sign off, though, just real quick, some of the things that you might be doing as an administrative personnel on different awards that might cause you to charge administrative salaries would be, you might have an award that has many different subs, 15 different subs. Well, it might take 20% of an administrative person to manage those subs. Hey, I'm going to charge directly. You might have a training award where you have to put together pamphlets, packets for each training session. It might be 50 members at a time. Well, that's going to be more time than I normally do to prepare that. So just keep that in mind when you're doing, you know, when you're charging the admin costs. Okay. Thank you for your time.
Our next speaker is Alex Galea, and he's with Research Admin, Sponsored Projects at School of Medicine. Thank you.
Hi everyone, I'm Alex Galea. I am the Assistant Director in the Office of Research Administration. The counterpart in my office, Tom Burns, who's an Associate Director in the office, will touch upon commercial research. I'm going to touch upon, commercial budgeting, and I'll be touching upon the NIH budgeting. So to begin with, I'll talk about the different budget categories when you start planning to your budget, and then the difference between a modular budget and a research and related budget in reference to NIH. We'll talk about what modified total direct costs mean. We'll touch upon some unallowable costs. When you start writing your budget justification, what the Office of Research Administration is reviewing in your budget justification. And then finally, touch upon once you receive your award, some post-award issues you should look at regarding your budgets. So the budget categories for NIH would be your personnel, which is going to be your salary and fringe benefits. Currently, the fringe benefit rate for faculty and staff is 34.5%. The fringe benefit rate for postdocs, if you're charging their salary, is 19.3%, and if you're charging a postdoc stipend, the fringe benefit is 11%. So this is a rate that you're going to charge on top of the salary that you're charging to the grant. And then we have a category of consultants. Equipment. Equipment is in reference to one piece of equipment that is over the cost of $5,000. Your materials and supplies. Your travel, whether it's domestic or foreign travel. Other, this is where you're gonna have, publication costs, or long distance phone calls, things of that nature. Patient care, inpatient or outpatient. If you have a consortium or subcontract on your budget. And finally, the facilities administrative cost, which is also known as your indirect or overhead rate. So regarding the consortium or subcontract, it's very important to start planning that early on, because part of our, what the members of the Office of Research Administration do, we determine if your sub is actually a sub or a vendor, which will also then have effect on your facilities and administrative rate. So if your sub is, if you have someone who's outside of the university doing a big portion of your work, it's most likely going to be a sub. But if they're doing very easy, like scanning or analysis for you, it might be a vendor. So it's important to have those talks early on to determine where they are in your budget. So once you figured out your direct cost, we do have to take in a facilities administrative rate on top of that. So currently, if you're doing organized research, which is awards that usually which support research activities, where the end result is usually to publish. You're doing data collection, evaluation, analysis, things of that nature. If you're doing it on campus, it is 62%, and off campus, it is 26%. So on campus means if you're doing the research on campus, if it's owned or leased by Johns Hopkins University, and off campus would be everything else. So for School of Medicine, I can't speak for School of Public Health. We do a majority rule. So if the majority of your research is being, let's say 60% is being done on campus and 40% is doing off campus, we will ask that the application be submitted 100% on campus. The reason we do that is because it's hard to determine which activities are really done on campus and off campus. So we do a majority rule standpoint. If your research is other sponsored activity, and some examples are service projects, travel grants, support for conferences or webinars or workshops. If it's done on campus, we use a 36% rate, and off campus, we use a 21% rate. And finally, you can do instruction, which is usually if you're submitting a fellowship or a career award. We do have a negotiated rate, but the reason I did not put the rate on the slide is because currently with NIH, most of those are capped at an 8% F&A rate. And the RFA that you're submitting to would state that. So there are two different types of budgets you would submit to NIH. They would be either research and related, or otherwise known as the R&R budget, or a modular budget. The R&R is what we call the detailed budget, is used for research grant applications requesting more than $250,000 in direct costs per year. While your modular budget is used for research grant applications requesting less than $250,000 direct costs per year. In your modular budget, we request amounts in $25,000 increments. So it would be the $25,000, $50,000, $75,000, $100,000, so on and so on. You still need to put together a budget for a modular, which we use for internal reasons. We do not give that budget to NIH. All we do is request the amount of $225,000. That is all they see. And then put where, when you submit a research and related detailed budget, NIH is going to see every single line of your budget. They want to know how much salary is going to be charged to the grant, how much supplies is going to be charged to the grant. So modified total direct cost, MTDC, is direct costs less certain excluded items detailed by negotiation agreement or by sponsor policy. So in this case, there are certain items which get excluded to being charged your facilities and administrative rate. And those are equipment, capital expenditures, patient care, tuition remission, rental costs, scholarships and fellowships, and subcontracts in excess of $25,000. So for example, if you have a budget for $100,000 in direct costs, and you have a piece of equipment that is $10,000, we will only take F&A on $90,000 of the direct costs. So some common unallowable costs that when we're reviewing budgets and budget justifications that we see would be alcohol. You cannot charge alcohol to your award unless you're doing an alcohol study. So unless it is for scientific reasons, no alcohol is allowed to be charged. Entertainment costs are not allowed to be charged as well. And so the biggest one we do see being charged to grants that we always have to reject applications back to get them fixed is general office supplies. You cannot charge office paper, pens, pencils, things of that nature to your grant. Those are covered by F&A. Budget justification. So your budget justification is where you provide the additional information requested in each budget category. So with personnel, you'll describe the role of the personnel on the project. You'll list their effort, which needs to be in calendar months, not percent effort. We still see a lot of people who are submitting budget justifications with percent effort, and we have to reject the application back to them so that is updated. When you need to justify your travel, you should include the purpose, the destination, the dates of travel, if they're known, and the number of individuals for each trip. So one of the big things you need to look at here is going back to what Rick was talking about with, is it reasonable? We see a lot of people who are letting them that they're going to a conference in DC. I've had a lot of GMSs, after we submit the award, come back to us and say, we're going to fund you, but we're cutting this travel to DC. We're in Baltimore, DC is an hour away. Sometimes they do not see it reasonable to get a hotel, and they don't want to pay for that cost because you can easily travel back and forth. They'd rather pay the mileage than a hotel in DC. Materials and supplies. Here you just indicate the general categories such as glassware, chemicals, animal costs, and you include the amount for each category. Categories less than $1,000 are required to be itemized. So once your budget is finalized, it is important to go back and reread your budget justification. What we see is the budget justification is written while they still have a draft of the budget. There are changes in the budget, and then they're not going back to redo the amounts that are listed in their budget justification. Consultants usually provide the names and organizational affiliations of all the consultants listed on your project. So post-award, when you receive your award from NIH, there's going to be a section that has your detailed budget. So it will look something like this. So just because this individual received $456,000, it's not money that they can do whatever they want. It's not their personal bank account. You can't spend as you want. They provide a breakdown of you have 113 for salary and wages, 32 for fringe benefits, 146. So that's the total personnel. 6,000 for equipment, 34 for supplies. So you can re-budget between categories up to 25% of the award. If you hit 25% or more, you need to get prior approval from the NIH before you can re-budget. One of the main reasons is if you are doing a big re-budget like that, NIH really wants to check to make sure that your scope of work's not changing. Because if your scope of work changes, NIH that also needs prior approval from NIH. So Tom will be talking about the commercial sponsored research programs.
Thanks. I'm Tom Burns. I'm an associate director in the ORA in School of Medicine. So just to start with a disclaimer, I'm filling in for a colleague of mine who's had a family emergency. She shouldn't go away. So I hope this is useful to you. Very easy to fly. So Alex just talked about budgets that were federal and NIH-sponsored budgets. What I'm talking about here is commercially sponsored budgets. So when we receive a research budget from a for-profit company to sponsor a trial, and a lot of this, you'll see it during my slides, are specific to the School of Medicine. So we talked about facilities and administration costs on awards. Rick and Alex both talked about that. This is a School of Medicine rate for commercially sponsored research. As you can see, on campus it's 72%, which is higher than the federally negotiated rate. And I mean, I should point out that's an actual cost. So these are actual expenses that we incur. So that's the origin of this rate. For on campus, it's 72%. For off campus, it's 34%. And that is for commercially sponsored research. When preparing budgets for commercially sponsored research, F&A is taken on total direct cost, or TDC, not modified total direct cost, or MTDC. So what Alex had just talked about was a modified total direct cost base, where there are exclusions from that base on which F&A is applied. In School of Medicine, for a commercially sponsored research project, we take F&A on the total direct costs. So there are no exclusions from the direct cost base. So those exclusions would be equipment, cost of subawards over $25,000, patient care, things like that. So when you're calculating an F&A rate on a commercially sponsored project, you're taking the total direct cost and applying the F&A rate to that number. As I said, the on-campus, if the research is taking place in on-campus space, organized research at 72%. If it's taking place in off-campus or clinical space, we charge 34%, and that is reflective of no facilities cost. So the facilities portion of that cost has been removed. So they're just paying the administration cost of the F&A component. So I thought I'd talk a little bit about payment. Most commercially sponsored research projects are awarded in the form of a contract, not a grant. We normally get commercial grants for some commercial fellowships and other commercial and then other projects, but most sponsored projects are awarded in the form of a contract. So payment becomes an issue, and there's a couple different types of ways to structure payment in a contract with a commercial entity. This is 4 of them, and there are others, but these are the most common that we see. This is fixed price contracts, cost reimbursable contracts, fixed fee per patient, normally for a clinical trial, or fixed fee per sample, normally for lab work. If you're doing some sample analysis and being paid on a per sample basis, you might structure a budget or a contract that way. So a fixed price contract is probably the most popular way to structure a commercially sponsored agreement. And what a fixed price contract is a fixed payment in exchange for the provision of specific services or deliverables, regardless of the cost to produce. So the cost to us is not factored into the payment that we receive. We receive a fixed price for delivering a specific deliverable or performing a specific service. And that is a quid pro quo arrangement. And the risk shifting is that the cost for us to produce that deliverable or to meet that milestone is irrelevant of what we're paid. So we run the risk of actually costing the university more, the department more to produce those deliverables, or we stand to gain if we can perform the work and for less costs. So in a sponsored, in a fixed price contract, there's no financial reporting to the sponsor. So we don't have to provide them with an actual reporting of costs normally. It's fixed price. We pay, or they pay us a fixed amount, and we give them deliverables A, B, C, and D. So we're not providing them with a reporting of actual cost, whereas with an NIH grant or with a foundation award, we're providing that sponsor with how we actually spent those funds. And we're normally constricted by budget categories. We have to spend a certain amount per category, and that's got to be commensurate with the budget that's attached to the agreement. In a fixed price contract, we're not tied to that budget specifically. So the sponsor generally has no financial audit rights, so they can't come in and see how we spent the money. This is the most flexible arrangement for the investigator because there are no budget categories. So you have the utmost flexibility with a fixed price agreement, whereas if you needed to re-budget funds from one category to another, you're free to do that without going back to the sponsor for prior approval. With an NIH award, in some circumstances, or with a foundation award, Normally, you have to go back to the sponsor if it was above a certain threshold to ask for permission to rebudget those funds to another category. And that provides the most flexibility for investigator as that project progresses. So payments are due upon achievement of a milestone or submission of a deliverable. So we hit a milestone, we've enrolled a certain number of patients, or we've provided a deliverable, which could be a report, which could be something tangible, some deliverable that we provided to that sponsor that triggers a payment that's due to us. Another feature is that the university can only retain a surplus balance at the end of that project. So this goes back to what I was saying earlier. If we have to charge a cost as they're incurred, as you would charge costs for any other sponsored project, if there is a surplus balance at the end of that project with a fixed price agreement where we've been paid a certain amount and the costs to perform that work that we've incurred are less than that payment, then there's a surplus balance on that account. The university does not have to return that normally, depending upon what the award says, to the sponsor. And a lot of times that can get transferred to a department upon approval. If it's over a threshold, it requires approval to transfer that surplus balance. We have to go and read the contract and make sure that we comply with the terms, and that we don't have to provide the sponsor with any reporting or anything like that. Once that's been confirmed, normally that would be allowed to be transferred to the department. More on fixed price contracts. So you want to draft a payment schedule that makes sense for the project, and that can vary. Specific projects require or lend themselves to different payment schedules. You want an appropriate amount up front at the start of the project, and you can negotiate that with the commercial sponsor. Clearly define deliverables and milestones, so we know exactly when payments are due, so we can invoice for payments regularly as soon as we hit a milestone or we've submitted a deliverable. You want to allow for some flexibility when building your budget. If you're working on a fixed price basis, you need to deliver that deliverable and provide that service for that fixed price. So you want to make sure that you're able to do that without any overruns. So you want to make sure that the budget is flexible and you build it that way. Not too flexible. We don't want budgets to be inflated. They still have to be reasonable. So the total amount of the fixed price contract should include direct costs, F&A, IRB costs, startup costs. So the total amount of the fixed price should be inclusive of everything. The F&A would be taken as receipt tax, which is when F&A is taken off that account when those payments come in. It's taken on money that comes in the door. So we would take in direct cost on the payments that as they come in the door, they're not a function of expenses or charges to the account. And then we still would like an internal budget. So a budget that does not get incorporated into that contract, but an internal budget for ORA or for the university to see, because we still want to be able to see how you're charging those costs, right? We still have an obligation to make sure that those costs are reasonable and consistently applied. So we want to make sure, we want to see how you're charging those costs, how you came up with those charges. But that is not required to be part of the contract. So you're not bound by an internal budget. It's just for JHU eyes only, but we want to make sure that we know how you came up with the budget and that it's reasonable and how you're charging those expenses. So cost reimbursable agreements are where we are reimbursed for actual cost expended in performing the project. So we we incur costs with their salary costs, equipment costs, subcontract costs. We incur those costs, their actual costs, and then we invoice the sponsor for those costs that we incur, their actual costs incurred. So we paid, it's not a fixed price. These are our actual expenditures in performing this work. Any unspent or unused funds will be returned to the sponsor at the end. So if we are given advanced payments, or if we're paid ahead of our charging, if we're paid in advance of what we're charging to the account, and there's a surplus balance at the end of the project, that needs to be returned to the sponsor if it's on a cost reimbursable basis. We're only allowed to be reimbursed for our actual costs spent. Okay? The scope of work can be specific with deliverables and milestones, or in this instance, they can be more general. If we're incurring costs, as we go, we're incurring costs necessary to complete the project. We don't necessarily need specific deliverables and milestones, although they can be very helpful. F&A is a function of expenses, so the F&A is charged as expenses are incurred. And the sponsor gets financial reporting and audit rights. We need to go back to the sponsor on a monthly or quarterly basis and tell the sponsor how we spent those funds. So they would know if you rebudgeted those funds and you didn't get approval for that, the sponsor's going to know about that. So we would have to go back to the sponsor ahead of time if we wanted to budget funds from one category to another, unless there was a clear threshold or clear approval in that contract that said we could do it. Okay. Fixed price per patient. This is normally with a clinical study. Sometimes we're paid a fixed amount per patient enrolled in the study. So we would be, if we enroll 100 patients, we would be paid $1,000 per patient that we enroll. So we're not paid if we don't enroll. So that's how that would work. We want to make sure we would get some kind of startup or IRB costs up front. This is a pretty risky way to design a study if you're not really confident in hitting the enrollment targets. So we want to make sure you have the startup costs and IRB costs up front that we're going to incur toward the beginning of the study, so we can kind of float that along until we hit a steady enrollment and we're enrolling as we thought. So you want to build your budget commensurate with confidence of hitting the enrollment targets. And then a fixed price per sample contract. And basically, this is for lab work. If people doing sample analysis that would contract with a company to do some kind of service, normally lab services, doing sample collections or sample analysis, they would want to be paid on a per sample basis. It's kind of like a fixed price basis, or fixed price per patient basis, but we're just talking about samples here. So you would have loaded rates. They would include F&A rates. So if we were getting $100 per sample, that rate might include our facilities administration costs already. So that would, we would want to see that on an internal budget, but the contract rate would be like per sample flat rate, $100 per sample we collect, up to a ceiling of $100,000, or however many samples were anticipated. Normally no reporting and no audit, and then invoices based on the number of samples that we've analyzed or collected, not our costs. So with commercially sponsored research in the School of Medicine, we need to charge IRB fees. So the IRB charges a review fee for commercial sponsors. This is the rate schedule that's currently in effect here. So it's a $2,500 initial review fee for a commercially sponsored project that requires the IRB to review. So that needs to be on the budget somewhere. So we have to make sure that we're going to be paid for that. Whether that's built into a fixed price agreement or whether that's an actual expense on a cost reimbursable contract, it's got to be in there somewhere because that's an actual cost the department's going to be charged in order to submit the IRB to be reviewed. So we have an office in Fells Point that does mainly our clinical research budgets in school medicine. So we have a clinical research support services, and what they're tasked, Karen Roz, heads up that group. What they're tasked to do is that they work with the departments creating clinical budgets, and they work with a lot of PRAs and a lot of budgets that are done in the clinical space, and they work with the sponsors to prepare those budgets for the clinical trial. So it's a whole service center that actually serves the departments when they're contemplating doing clinical work with commercial entities. So it's fully staffed, and it's really helpful for departments to reach out to them, to contact them. They'll work with you on your budgets. They will negotiate the budgets with the sponsor, and once those budgets are done and complete, and simultaneously the directors in the ORA are negotiating the contract with the sponsor. So once everything's complete, we sign the contract, the budget gets attached to the contract, and we're all ready to go. So we do offer that service. If anybody has any more information on clinical budgets, commercially sponsored clinical budgets, please contact me. Feel free to give Karen a call. She'll probably hate me for saying that, but please call me email. But that service is available for anyone who has any questions. Thank you.
All right. Our next speaker is April Hawkins, and she is with the School of Public Health, one of the research service managers.
Good afternoon, everyone. Again, my name is Hawkins, and I work in the School of Accounting Department of Epidemiology. And I am a research manager, and my role in the department is I submit all new proposals. I work with the faculty members for all new contracts that come through. I just wanted to speak briefly to share a few things to help our new faculty members coming in with those postdocs transitioning to faculty, to give them some information when they're in the process of submitting their first time proposals. From a time management perspective, as soon as you have identified that you are going to submit, you should let your analyst or your research manager or that designated person who will be helping you assist to let them know as soon as possible. ORA requires their 3 to 5 business days to review before the sponsor deadline. And then your analyst assisting you with your proposal, they usually need about 2 to 3 days just to assemble your package. But there's a lot of work that goes into that before you get to that time point. If you're working with your subcontractors from other institutions, they usually require about 2 weeks to get their budgets done and to get their documents and get institutional signatures. If you're waiting on quotes from other companies, if you're budgeting equipment, or just be mindful of the time that it takes to obtain all those documents. In addition, in my department, and I know things vary from department across the universities, there is a scientific review that takes place before you can submit your proposal. So, for example, our department chair reviews all of the science before the proposal can be submitted 2 weeks before the due date. So that gives you time to get some perspective from your mentor, the designated collaborator, to help give you feedback on the proposal, and so that you can incorporate those details into your proposal. So again, what I do is I sit with my faculty member. I give them a checklist of everything that is required, and I iron out a timeline. I like to get the budgets and subcontract documents, and then we'll go from there with our budget sketches and all those other components. And they do add up, so that brings me to my second point, which is reading the instructions. I know when you're submitting a grant from NIH for the first time, there's a lot of overwhelming information. There's RFA specific information, and then there's supplemental instructions, and our analysts and the managers are there to help you sort through all those pieces. So normally what I do is I gather and create a checklist for my faculty member of all the components that will be needed based on reading the RFA and the instructions, and we'll sit down and I'll say these are all the items that you need to complete the application. And then they can work on those items. I also send a list to the subcontractors. These are all the required documents that are going to be needed. I also ask the faculty members to be very careful, because I, as the manager or your analyst, we're mainly responsible for the financial part, your budget, your justification, making sure all the components are there. We are not really specialized in the area of your scientific content. So your collaborators or your mentors or your department chair, whoever helps you with that, they can go over those instructions to make sure that you've included all the required scientific aspects. Because what happens is, ORA will do their next review, and they'll do a careful review to make sure all those components are there, but they don't necessarily go into your scientific aspects. Sometimes applications do get rejected or they're not discussed because those items are not included. So that's why I say please carefully read the instructions. There are a lot of instructions, and with the amount of time to submit the proposal, to give everyone thorough time to review, to get all the documents to the subcontractors, have your analysts do a thorough review, have ORA do their review, and to get successfully submitted through the ERA Commons process. Normally, a good month is a good time frame for that. We push grants through in 2 weeks, 1 week, but they don't get the detailed, thorough review, and we miss things. We don't have time to do change correctives, or things happen with the transmission. So I just wanted to stress the importance of that time management piece to identify who your contact is and sit with them to go through that whole process so that you can have a successful application. Another thing is for our faculty member, again, those postdocs transferring to the faculty position. We do have errors, so for my department, that's one thing that I do check to make sure that you do have the assigned PI role when you are submitting an IPH application, because that will create an error in your application not convert. Also, for those faculty members who are transferring from a previous institution, you have to have your ERA comments affiliated with Johns Hopkins, because that will also require an error. So those are like the kind of errors that I've seen come across that I'm mindful of when I'm working with new faculty members. And the COEUS, our COEUS Premium and COEUS Lite, we use those systems to submit our grant system to system and interfaces with ERA Commons. So we as the analysts, we are normally uploading your application, we're putting all your information in there, and it gets submitted to ORA. A lot of faculty members don't know that they can get access to those systems, and they can easily review their proposal and COEUS Lite. And it's a good tool to use because you can review your full application before it actually gets submitted to NIH. It's a good way to identify if you see something and say, oh, this needs to be corrected, or I want to revise this, or I want to swap out that document. A lot of times for my faculty members who are like full professors and are doing this, they really don't care about it, and they're not going to take the time to get the access. So I will print out their grant proposal for them and COEUS Lite so they can see how it looks assembled, so that they'll have a chance to review it and make any corrections before it's actually submitted. And this process does cut down a lot on change corrected applications, because you can notice in the actual grant.gov forms if something's not right or if something doesn't look right. And your analyst or research manager for your department can get access to COEUS Lite, and you can review as the process goes along and document your budgets and the whole application. And again, just for new faculty, I don't know if you're in this room right now, but if you can get oriented to your department's process for submitting grants when you first get started, it will make things a lot easier. I've gotten proposals from faculty members. They come in and they're new, they don't know the whole process, and they've submitted this whole package, and they're like, I need signatures so this can go. So one thing that I do stress for most departments is to make sure that you have an orientation process for your new faculty member to come in, to let them know what the process is, what the timeline is, who their direct contact is, how you interface with ORA, what their responsibilities are versus your responsibility, and who's going to submit and package of that sort. So hopefully some of that information is useful to you.
Our last presenter is Maria Wawer, and she is a professor here at the School of Public Health, and she's going to give us the perspective of an investigator.
Hello, everybody. Thank you so much for coming. So we're going to change track a little bit because I'm not an administrator, I'm a researcher, I'm a PI. But I do want to tell you genuinely that the budget as a PI is really good. And I've had 14 R01s of over 30 million. I've had over 30 million in Gates funding, another 20 million in sort of miscellaneous funding, and every proposal I've ever written, as soon as I get the specific aims, I start doing the budget simultaneously. So what I'm hoping is that we can feel less frightened about budgets and use them as a scaffolding for what we're doing. How does drafting your own budget and budget justification help you as the PI? It helps organize your thoughts, because you've got this great research idea, but unless you can also prove to study section that you know how to operationalize your research, that you can show them that you know how to do it, it's not going to fly. Because they'll say, great idea, but this is just not going to be feasible. It helps organize your thoughts because you think of what manpower do I need, what personnel, how many interviewers do I need, how many interviews can we do a day? Do I need an economist? Do I need a lab person? You know, everything that I need to do, the budget, because it's right there in front of you, it helps you think it over. What equipment do you need? What supplies? How many lab tests? How many clinical assessments, etc.? Other resources. If you're not thinking along those lines, you get to the end of your technical proposal and you haven't, you know, suddenly it's not going to be feasible. As I say, it acts as a scaffolding for your technical methods section. Think of it as part of your technical methods. Also, doing the budget as you go along, writing the technical, it provides immediate feedback. You know, you are doing your own budget. You don't have to sort of send something into your admin, and then even the fastest admin person, and April is terrific, but even that, it takes several days. Whereas if you've got your own spreadsheet going, you can tell right away how much things are costing and what the total line, you know, bottom line is. It helps avoid terrible surprises just before the submission date, a bit like April was saying. Over and over again, I've seen proposals that folks were doing that at the last minute, the budget gets done, and suddenly they realize they're way over the NIH cap, or they're over the K award cap. And if you don't know that that is happening, you don't have time to rectify it in time. And people have actually not been able to submit because they suddenly realize, I need another 4 months to rethink this before I can submit because it's way over budget. It also gives you time to talk, in this case I'm thinking about NIH, with your program officer, because sometimes if your budget is going to be way over the $500,000 cap these days, you can go to your program officer and get permission to go over. But that requires at least 6 weeks advance time for your program officer to, you know, try to get the permission. And you don't know whether they're going to get the permission immediately. So in other words, give yourself a lot of leeway. When I'm doing an NIH proposal or a larger Gates proposal, I give myself 2.5 months. 2.5 months from the time I first start writing the specific aims to the time that it's due. Because it always takes longer than you think. Some distraction is always going to happen during that period that takes some time away from it. And as I say, if you want to go over the cap or need to go over the cap, you need at least 6 weeks advance notice to NIH. So don't rush it. I've seen, very smart, great colleagues come in and say, I want to put in this NIH proposal in a month's time. And I say, no. It's too late. Do it for the next cycle. You want to give it your best shot, and that includes also the budget having the best shot. Study section does look at budgets, and certainly at budget justifications. So your budget and budget justification must be persuasive, they must bolster the technical narrative, they must be structured to increase the chance of being funded and reduce the chances of a major administrative budget cut. If you say you need a vehicle for a project overseas, you've got to justify that vehicle. It can't just be, we need a vehicle. It's got to be, sell that vehicle. Also, as the PI, you know your project best. Now, the best place to accomplish all of these goals. Also, what I find with the budget is that if you are using your budget and technical simultaneously, it gives you a sense of control. Common pitfalls, and April alluded to a lot of them, that a PI hands an administrator a list of stuff and asks the administrator to drop a budget, often a week or two before the budget is due downstairs. But the administration, and I use admin at all levels, including the project administrators that are working directly with us, April, through all levels of administration. Administration can't read your mind. They don't know what manpower you need. They don't know what lab tests you need. They don't know how many interviewers. They don't know any of these things. You can't just say, write me a budget for this kind of work that I need to do. You need to tell them clearly, and in your own mind you have to be clear as to what you need. Also, the administration doesn't necessarily know what discussions you may have had with your NIH scientific officer, which might also influence your budget. And especially if a subcontract is required, you've got to give enough lead time, both to yourself, to the institution that's going to be your subcontract, and to the administration. And it's really not that hard. What I suggest and what I do is, as soon as I draft the specific aims and have some colleagues look at them to tell me, okay, this makes sense or this doesn't. I make a to-do list of every component required by the donor. And that is done in, with administration. Because such a list is very helpful in giving you a sense of control. You have a list in front of you of everything that's needed. Share the to-do list with your administration and be collaborators and divvy up the tasks. You don't have to do everything. At the same time, fire up a draft Excel spreadsheet. As you work on your technical, especially the methods section, including sample sizes, have the spreadsheet open and be putting stuff in. I literally have, the specific aims on one screen, the methods that I'm working on a second screen, and the Excel spreadsheet on the third screen, so that I'm working all of them simultaneously. And input key elements on the spreadsheet as you go along. Okay, this is just a to-do list that I did for one of my proposals. And again, it's just to show you, it's very reassuring because you've got a list of everything that you need, including all the people that you need letters from and all the people that you plan to have on your proposal. And then I check it off as draft, final, and on forms. And I actually put it up on the door of my office. And I have it on my computer, but also on the door of the office. And there's nothing more satisfying than going up and being able to check something off. And also it keeps you, and you're working at the same time with your administrator and administration who are also checking stuff off, so that you know exactly what's progressing and what isn't. And it gives you a sense of satisfaction and a sense of control. It's not just, I feel panic stricken, I don't know what's happening. You know exactly what's happening. It feels good. This is an actual budget that I did for one of my proposals, and I've taken out all the salaries and all the costs. But I put year 1, year 2, year 3, year 4. I do this kind of Excel spreadsheet for every proposal that I'm doing. And I put in, everybody that I think I'm going to need and what percentage time, and I am telling it up at the bottom as to what each year costs. Because you don't want to go over caps. You want to, and you can also fiddle. Let's say you need $4,000 worth of lab tests, and in 1 year you're $2,000 over on your budget. Well, you can kind of fiddle it. You can pre-buy tests in the previous year, or maybe you'll put off some of your lab testing. In other words, you're there dynamically figuring out how you're going to allocate stuff, but also what your technical is going to say. My grants always have subcontracts. So again, with the subcontract, I'll put in the salaries, the different kinds of personnel I need, the exact percentages. Again, I'm thinking, I'll need a driver because there's no transport in Uganda where I work. So let's see, we have this many participants. That's going to require this many interviewers. That's going to require that many trips to and from the airport to pick up supplies. So obviously I can't guess completely right, but I can kind of get a sense. I'm going to need 2 drivers, and I'm going to need to buy 2 vehicles, and the percentage time of all the personnel is going to be such and such. Again, it's not just a budget exercise because you're writing your methods, and in your justification, you've got to say why you've got certain numbers of people. So you need to know for sure and be clear in your own mind what you need. The other thing that I do, again, this is very detailed. A lot of your proposals, particularly the earlier ones, will not be this detailed because you're not going to have as many subcontracts, etc. And I don't want to scare you. I'm just saying this, showing you an example of what works. The other thing that I did in one of the last proposals I did is that at the bottom of my work Excel spreadsheet, I actually put the enrollment targets per year. Because if I need, how am I going to organize my enrollment so that it fits within the budget caps for every year? Back in the old days, this will make you cry, there were no budget caps. You could go in with as big an R1 as you wanted. Now, if it was bigger, it was less likely to be funded, but still, you could go in with, you didn't have to get permission to put in a $15 million R1. Those days, unfortunately, are gone. So you are basically juggling how much work am I going to do in any given year so I can stay within the budget caps. And again, with the enrollment target, that helps you shape the budget. It ensures that every year is feasible, but it also technically tells you, will I be able to do this? If I'm going to try to do 5,000 interviews in 1 year, I mean, that's just not feasible. You know, how do I divvy it up so that I can persuade in the budget justification that this thing is feasible? Budget justifications are incredibly important. They complement the technical. And yes, study sessions do read budget justifications. These days, with the horrible NIH and Gates forms, they don't read budgets as much because they're incomprehensible. But they do read budget justifications. And particularly the kinds of folks who read budget justifications are the details-oriented ones. You don't want to trip them up. If in your technical you say, we're going to do such and such, and your budget justification doesn't reflect that, they're going to say, this person doesn't know what they're doing. You don't want to be tripped up on something silly like that. Okay, additional points. Your budget draft is a technical planning tool, not just a yucky spreadsheet. It does not, preparing the kind of Excel spreadsheet that I do, does not require fancy knowledge of Excel formulas or accounting. Keep it simple. Your administration will do the fancy work of, you know, exactly what is the F&A this year, exactly what is the indirect costs, exactly when does your project start or end. They will do the fancy stuff. Oh, by the way, when it comes to indirect costs, SPIs, you don't have to worry about it. For NIH, they are not part of the cap. So whether Hawkins is charging 30% or 60%, for the cap, for your technical, you don't have to worry. That's admin's problem to worry about what the overhead is. In some foundation budgets, the direct does count towards the total. So you have to know what the regulations are with respect to any different granting source. But don't worry your pretty little heads about indirect for NIH. If you know how to add, multiply, divide, and copy in Excel, you will be fine. Because the fancy formulas, that's, you know, for the experts. Now, I call this, what you're doing, a draft for good reason. It's not the final polished product. Obviously, as April said, you've got to confer frequently, early and frequently, with your administration on what various things cost, what salaries are. The fringe benefit rate does count towards the cap. What is allowable and not allowable, so I'm in perfect sync with what was said before. And share the draft budgets as you go along, just like you share the draft technical. You know, you want to show your specific aims immediately to your colleagues. As you go along, you want to be showing your technical. Don't wait until it's polished, that's too late. Share, same with the budget. Your administration will check your work, prepare the final version, including, you know, calculating salary increments and when they occur, adjustments for start and end dates, most recent fringe and IBC, etc. And they will put all of that on the horrible NIH or Gates warrants. However, you really do want to do a final check to make sure that every year is within whatever the budget cap is or other guidelines if applicable. Now, I talk about the cap. Obviously, if you've got a relatively small R1, you don't want to be anywhere near $500,000 because people will say, they went to $500,000 because they thought they could get away with it. You've got to have some sense in your mind of how much is this work worth. And if it's worth $125,000 a year, go for $125,000 a year. But in other words, you also want to be checking your budget to make sure you're not looking unreasonable. And again, make sure that technical, and particularly the technical and the budget justification, are completely consistent. So as PI, you're reading and rereading the technical, you're writing and rereading the budget justification, working with the administration. But you have got to know that budget justification inside outside. Good luck and thank you. And I left my email in case anyone wants to get in touch.
The first speaker, about the federal regulations, you mentioned that if you had an award before December 2014, you can, the new forms are not necessarily, you have to worry about them. But after progress report, you said you eventually will have to follow that rule. I didn't understand that.
There's two sets of compliance rules. The old was the OMB Circular 821. That was the cost principles for awards that were awarded prior to 12/26/2014. After that date, if you got a new award or a new appropriation, then you would follow the uniform guidance. And what the uniform guidance is one big circular that took all the old OMB circulars, A31, A110, and A31, A87, and put them all into one circular. So you are following cost principles regardless of when you got your award, it's just which ones you're following. And they're pretty similar.
So
Does that
we
answer
got
your
an
question?
award at 12/1/2014,
Mhm.
which is before 12/26. For 7 years, we are still only obligated to the 8/21.
Yes, you are. Now, when you get your new appropriation for next year, that's all gonna be the new uniform guidance.
So that's what I was, okay, so
Yeah.
then it will change
Yes, it will.
based on.
Yes, it will.
So,
So it's new awards or new appropriation. So if you have a continuation, a supplement, or whatever it might be, any new funding. So at some point in time, we're all gonna be under the uniform guidance. And usually it's gonna take about a year.
that's it. Thank you.
You're welcome.
Are there any other questions from the group?
How do we handle material donations, supplies, or equipment from for-profit companies?
Normally, we handle those with an MTA, a material transfer agreement.
Okay.
So, is that in conjunction with?
It's not a federal board, actually, it goes right on for our board, we just fund donation, so.
Okay, so it's like an in-kind donation.
Mhm.
It would probably be, I mean, you'd have to do a material transfer agreement to effectuate the transfer of the materials. So that would be done either with tech transfer or your LRA.
Okay,
And that would, so that's how I would do that.
okay. And,
If it's a research grant and you're publishing, you would definitely want to disclose that you got that in-kind contribution in the paper that you're submitting. So you don't want to get dinged later on that you received something from commercial place that you haven't disclosed.
Right. But that term might even be in the agreement that they
And you have to treat it, if it is cost sharing, I don't know if you have a cost sharing obligation, if that's part of that cost sharing obligation.
if we don't, but,
You don't?
yeah.
Okay. Then you would have to follow the cost sharing requirements to get that in.
Are there any other questions from the audience? Okay, go ahead, please.
You have in your budget, I noticed you have the insurance and fund, workman comp, NSF.
That's for the Ugandan subcontract.
Exactly.
And we have to do it because there's just not enough. We've never had a problem with that. And the international projects just don't get enough indirect costs to be able to cover those things. You know, because those line items are more than the total indirect cost available to us.
That's why I'm paying attention to it, because 8% F&A that we get never covers all that. And the fringe benefit also doesn't cover. So we were told that we couldn't do those as a separate item.
Well, they're like fringe benefit for Hawkins. So if their fringe benefit, if Hawkins allows it, then that has to be allowed in the subcontract. Because it's a fringe benefit. I mean, just like, you know, our social, you know, basically our,
Exactly.
you know, all the stuff that fringe covers here, that covers that. It's just that we put it out specific.
Yes, please.
Talk about cost recovery. So if a sponsor allows for a lower indirect cost rate or F&A, I've seen budgets where an artist has then put in things like IRB costs, like supplies and facilities, as direct costs for cost recovery.
That varies by school, so you would need to follow the school and the Office of Research Administration policies that you're submitting under. For example, in the School of Medicine, we do not have a cost recovery policy. So if you are submitting with a foundation that has a 10% F&A rate, we accept that rate and we do not ask any other costs to be added in. And the School of Public Health has a policy in place that needs to be followed.
And the policy is actually on ORA's website, and it'll tell you for non-federal proposals, when they do restrict IBC, that you do have to build in cost recovery that is applicable to that particular application.
And just want to make sure that if you are with the federal award, we have a negotiated rate, you have to use that rate and you cannot add anything more that's also included in that base that established that rate. That would be that double dipping that I spoke of.
Okay. And could you just give me a sense about how indirect costs are determined if you're not line iteming like every single thing?
With that,
With
it's a-
electricity and stuff, how does one determine what the indirect costs are at the end of the day?
We have a whole office.
Yeah, and there's not enough time for me to answer that question appropriately, but
Just
we
so
have,
brief.
we have an indirect cost rate.
Okay.
Okay, 62%, 62.5%, it fluctuates, it goes every year. And it takes a lot of pain and effort to negotiate that rate. And what we have to do is segregate different costs into different buckets. Okay, so you have all your administrative costs, that's one bucket, and then you have all your research direct costs. You divide one into the other and you come to a rate. Now, how do you determine what is considered an indirect cost? And that's one of those things I spoke about earlier, something that you can't easily identify to a particular cost object because it's too hard to do. It's the lighting, the electricity, buildings, administrative costs. They're all considered indirect costs. So we put those in a pool and we develop a rate for the university. And we recover those costs by applying that rate to either the direct cost or the modified total direct cost. Usually with federal awards, it's on a modified total direct cost base. So we have some exclusions. Does that help? I mean, it's very involved how they go through all the different buckets that they appropriate the indirect costs into.
And again, for an international subcontract, the rules are somewhat different because Hawkins get a 62% F&A rate. International projects get 8%, and in many cases that's shared between several different institutions. So it's like pennies that they're getting towards such things, so that we do charge electricity and water on our international subcontracts.
Yeah, your subcontractors.
Yes,
They're only allowed
international
8%, but the university, we will take our full negotiated F&A rate regardless. Now, we do have, if it's in R&D, research and development, that's the full rate,
So when you say
62.
negotiate, is that negotiating with the federal government?
With the federal government, that is correct. We negotiate with DHHS, Department of Health and Human Services.
So again, as individual researchers, we don't have to worry about that because that's already been negotiated. And again, that doesn't count towards any cap of what we're doing.
There's a copy of the actual agreement with all the rates online, Controller's Office, if you ever want to just take a look at it and see what the rates are.
But how we develop that rate is a very complex.
Oh, I got you.
And again, as researchers, we don't have to memorize all of these rates because that's where in the administrative structure, we show as soon as possible, we're discussing all of that with administration, and they know what the current fringe rates are. They know what the current direct and indirect cost rates are. So, because they change.
They change yearly.
Yeah.
But it's your responsibility not to know what the rate is, but what is considered an indirect cost or direct cost. Because you don't want to charge an indirect cost directly. And that's what was when I spoke about in my presentation.
And that also changes. What is considered indirect and direct changes over time as well. Because there were things that once we were allowed to charge, we're no longer allowed to charge. So that also changes.
Just a specific point, computers, I saw that list of sort of printers, phones, et cetera, but for people who are not 100% on a specific project, how do you charge computers or those considered direct?
Computers are now allowed to be charged to federal awards.
They are. Are there restrictions on them?
They still have to meet a direct cost. They have to be allowable, but they might not be allowable to one award. So you have to come up with a method of how you can tell how to charge this directly. So if you still can't do that, then no, you still can't charge that. So you still have to meet a direct cost. A direct cost is a direct cost. Allowable, reasonable, and consistently treated. But now, we're not talking about lab supplies or lab computers, technical computers. You can haul. We know that they belong to a particular cost object or program.
But I like to tell people a lot of time when they want to charge computers, if they're on multiple awards, and you can charge, by your effort, you're in 10% on one award, 10% on another award. Well, charge that laptop, 10% to one award, 10% to another award, and it's,
And that works out well. That's a good method to do.
Well, except that it's hard to buy 10% of the computer.
Well, you
Pay 80% on your general fund still, but you can allocate what you can, and then general funds have to pick up the rest.
So are you saying the department is obligated to give us computer, even if we don't have research?
No, I'm not saying that at all.
That's the catch-22. That's the catch-22. The departments aren't obligated to give you paper,
You have that on the
pencils, or
video, right?
computers. Yeah. So departments aren't obligated, so we have to be within the letter of the law, but we have to be a little creative. Because again, you can't buy 10% of a computer, and, you need to work on that machine.
And can I add one little caveat to when you're submitting a proposal and some of maybe the pitfalls that you don't think about? I know that if we're talking about new faculty, we have an effort reporting system, we have mandated effort training, and it's my understanding the ORA office, the RPA office won't allow a submission unless that training has been fulfilled.
That is correct.
So we want to make sure that that's done prior, if it's someone new to the university or a new faculty member submitting their first proposal, that has been completed.
And as well as your financial conflict of interest training. Any new subject.
And responsible conduct of research.
The training we didn't mention.
Do we have any other questions? Do you guys have any other helpful hints that maybe haven't been covered yet that you've thought of, or not? Well, I thank you all for attending, and I especially thank our panelists. This was, I've been at Hawkins for over 20 years, and I've been doing research for 15, and this was still very helpful. So I hope that it was useful to you as well.